Treasury set to warn in 4 forthcoming reports next week that the financial risks of cryptocurrencies outweigh the benefits unless they are properly regulated.
Really the first time a US president ever spoke in a meaningful way about cryptocurrency at all, tasked the interagencies, so executive branch agencies, with coming back with reports on how they intend to, or sort of the best practices for regulating cryptocurrency in so many different areas, from environmental to consumer protection, law enforcement to sort of systemic issues. And really what we're going to see over the next few weeks is these agencies sort of respond with their plans.
Joe Biden administration is beginning to pay close attention to cryptocurrencies, and we can expect a lot of new regulations in the coming weeks. Issues such as proper categorization of cryptocurrencies, security, and the environmental impact crypto mining is having are all part of the issues to be ironed out. Russia has just recently announced that it is looking into the possibility of using cryptocurrencies for cross-border transactions. This announcement by the Kremlin would definitely have a huge impact on the crypto market, as this could cause unfavorable reactions from superpowers such as the United States. Raoul Pal is back to discuss these issues and more. Welcome to today's episode. Before you continue, please like and subscribe. We really appreciate it when you do that. First, the investment expert dissects the topic of crypto adoption and how this is stifling the prices of cryptocurrencies. Let's listen to him.
Macro backdrop, that's where we start. The macro backdrop, the thing that drives crypto that everybody has now learnt is the adoption cycle. So how many people are adopting? And we're seeing, for example, the number of wallets in Ethereum and stuff go up, but the overall activity of these networks are pretty stable. They came down from peak, they've remained stable, and that's why the price action's been sideways, trended lower in the summer as we had all of the CeFi shocks. But the main driver of all of this is liquidity. Liquidity drives all financial markets. Liquidity, for the definition here, would be the kind of ease of which money flows around the system. And I can use money supply growth, M2 growth globally. And obviously with the central banks all jacking up rates and shrinking their balance sheets, what they're actually saying to you is, we want to take liquidity out so you guys can't do as much speculation. Now, what that means is things like your credit card rate goes up, your mortgage rate goes up, you've got less money to spend on stuff. So liquidity, your liquidity has been taken out of your pocket. And it's the same for everybody, particularly because there's so much debt in the system. However, our job is not to live in the present. Our job is to live in the future. And we need to understand where the future lies. So Stan Druckenmiller importantly said that the job in macro is to see 12 to 18 months out, because the asset markets tend to price the future. In the future, in 12 months' time, the probability of inflation being, at 8% is extremely low because of the year-on-year computational differences and the fact that oil, copper, freight rates, everything has come down massively. So I'm thinking that there is a probability that inflation goes negative within 18 months. So if we look out 12 months, the recession is behind us, rates are lower, and inflation is low. Okay, so that is a very good outcome for risk assets and crypto. Crypto bottomed in June. We had the retest. Bitcoin had a retest only 2 days ago, and I think it was the retest. So my DMARC indicators, which I use mainly for my technical analysis, gave me that signal. ETH had a much stronger signal in June. And I started finding as much money as I could under the sofa anywhere to start investing, adding to my positions. I never sold anything.
Cryptocurrencies have suffered unfavorable regulations and bans from several countries around the world, leading to slow adoption of cryptocurrencies. Without conventional adaptation, growth of cryptocurrencies would remain shackled only to its current community of enthusiasts. Russia, in a surprising twist, has come out to say it is strongly considering the option of cryptocurrencies for cross-border payments. If this happens, it would be huge for the crypto market, and we are likely to see incredible leaps in the value of the major cryptocurrencies, as this could see major demand for crypto. Raoul Pal thinks lack of adoption is one of the major reasons cryptocurrencies are struggling, as we're not seeing increased development that would bring cryptocurrency use to more users. Recently, the IMF produced a publication in which it proposes regulation for cryptocurrencies, not to suppress them, but to make this market safer for investors, which would accelerate adoption. Besides slow adoption, the fact is there's just no loose cash for speculations. The state of the economy has made investment of the least concern to people. Just as Raoul said, M2 growth is slowing, meaning that there is not much liquidity in the system, and with low liquidity comes low speculations, and hence the bearish markets as we have. A recent report revealed that in the past 3 years, M2 growth had averaged about 14.3% annually, but this growth has dropped to 5.6% in the first half of this year. With the system starving of liquidity, there's not much capital for investors to risk. In order to get inflation under control, the Fed has introduced tightening measures, and one is the reduced M2 growth and increased rates. Peter Schiff, a financial and economics expert, says these contractions are feeding the bear market in Nasdaq, Russell 2000, and the S&P. Mortgage rates are also up by 5.5%.
So there's less ETH around, but then we've got this magic. The magic is you've just introduced yield into the ETH ecosystem in a secure way. So therefore, because it's a protocol level, so therefore this is going to attract new people into the ecosystem who want to get ETH for yield. So you've got a demand shock. Also the lack of the ESG restrictions that people have with Bitcoin, falsely so, but I understand that that's the mandate people have got. So you've got people who are frustrated who wanted to invest but couldn't because of ESG and Bitcoin. The ETH merge, they're waiting for it to happen. ETH now has a yield. A lot of institutions don't own gold because it doesn't have a yield. So you've got this technology asset that represents a big, exciting future with a yield, with a limited supply. So that has and a macro that's changing. That to me suggests the next 12 months probably very, very good for digital assets.
ESGs have become the major fad in investment circles. Environmental, social, and governance factor, better known as ESGs, are now a huge consideration for most investment portfolios, as investors seek to invest only in companies and industries that are making considerations that would positively impact the environment. Unfortunately, this is highly unfavorable for Bitcoin, as there's an ongoing debate on the environmental footprint of Bitcoin mining. Fortunately for Ethereum, the merge would greatly give Ethereum a high ESG score, and we're likely to see the institutional investors add Ethereum to their portfolio. Where would this leave Bitcoin? This is yet to be seen.
Meantime, it's a scary world out there. Everybody is super bearish about everything. The game is to look forwards and not look at today, not extrapolate the worst, but extrapolate the most likely outcomes. The most likely outcome is not nuclear war, people dying of hunger in the streets of Europe. The most likely outcome is a solution. A most likely outcome is an increase in liquidity. A most likely outcome is a recession followed by a recovery. If you're armed with some sort of probabilistic framework and time work of that, these look like good times to be accumulating digital assets for the long haul, because it's a weird old world where you get used to, once you've been in the space for a while, kind of an 80% pullback is normal bear market, like a 20% pullback is a bear market in equities. It's 80% in crypto. The upside average is like 20x. So the risk rewards are huge. Even if I'm wrong and it goes down 50% from here, Bitcoin goes down 50% here down to 10,000, but the upside is 20x. Well, that's still a ridiculous 40x risk reward. Why would you not take that bet? Just don't do it with leverage. That's the only thing, always.
Raoul believes there is hope, and the most likely outcome is progress. Things could get worse, but they'll only get better after that. One thing is sure, we have interesting times ahead, and we have to be prepared. Thanks for watching. Like, subscribe, and turn on the notification bell so you won't miss our exciting upload.